Hi, this is Zak Mir with the Share Talk Bulletin Board Heroes on Friday, the 21st of September. Starting off with an old favourite, Filtronic, which I think has gone up from around 10 or 11p since it was first highlighted here in the recent past. Looks like we've got a trajectory here as high as 30 pence, and that's valid really while we hold above the floor of this rising June trend channel, running currently around 19 pence. Nice gap up to the upside today. Following on from the gaps earlier this month, and also the unfilled gap there at the beginning of August. So really limit up in terms of how it's progressing. It couldn't really be much better than that. On Greatland Gold, we had an attempt to break this wedge earlier in the month. Looks like we've got second time lucky here. With the break above, what's that, 1.1 pence. While we're above that, aggressive traders already be going long. Otherwise, wait for an end-of-day close above the 50-day moving average at 1.24 pence as we look for the main resistance area of the recent past, 1.4, 1.5, as the technical target stop loss back below 1.1 at the moment. Going on to a stock which I championed recently and seems to have come good quite well over the last few days. Had a beautiful progression, really. The break above the 200-day moving average beginning of early last month, but the gap there through the 50-day line, that's normally a telltale sign of something good to come. Then we had the golden cross after the vertical move through the two moving averages there. Again, the second part of the situation that you would expect, and then one touch on the 50-day line earlier this week to give us nearly up to the initial target there, the 4.25 pence October price channel top target. So just shy of that today. Hopefully we'll get that pretty soon. As far as the stop loss is concerned, probably back below 3.4 at the moment would be the best way of managing that particular situation, especially given how overbought the RSI is now near 90. On to Hemogenyx, which I covered earlier in the month. There was a flurry earlier in the week, up to 3.5 pence intraday. What's encouraging at the moment, I suppose, is the way that we're still holding above the wedge and also holding above the 50-day moving average at 2.75 pence. While we remain above that, one would be reasonably positive that we can go on to retest the best levels of this week. Otherwise, if you're cautious, maybe wait for an end-of-day close above the 200-day moving average at 2.99 pence before thinking about pressing the buy button. On to the next situation, which has also had a bit of a flurry this week, comes in the form of Providence Resources. Here we've had the gap higher yesterday, unfilled gap to the upside, and breaking yesterday's high, which is encouraging. Yesterday's high 12.5 pence, now 12.8, so that is cool. And ideally we get an end of week close above 13 pence to then set us up for a 17 pence target at the top of a rising January trend channel. This stage only back below yesterday's low, 11.35, would really suggest there was any danger of this being a false dawn to the upside. Revisiting Regal Petroleum, which I've covered many times from very low levels. Interesting that we had eventually yesterday the end-of-day close above 40 pence that we were looking for, and good follow-through today, almost hitting 50. The overall target here over the near term is 65, which is the top of that rising June trend channel, and that valid while we hold above the 40 pence handle. Onto a stock which has also been covered here many times before and just broken up nicely too. I think the last time of late was when we covered the shares as they filled the gap, the initial August gap towards 70, 71 pence. Broke that line there, 77 pence, the August resistance line, and have flown quite well since then. Looking now towards 115 is the big target here, the top of a rising March trend channel. And that valid very much while we hold above the old August peak at 87.4 pence. Onto a stock which I haven't covered here before on the Bulletin Board Heroes, but looks as though might be worth investigating. The issue here really is whether we've broken that line from March. That's running through, what's that, sort of 48, 49 pence. So above that, aggressive traders maybe looking for follow through on the upside. Best case scenario here at the moment, probably to go up and fill that gap towards 80 pence. But it's early days yet, and obviously one would want to see just a bit more strength here from the shares, even though we had a great bullish candle yesterday for the stock. At least while we're above 38 pence, the 50-day line, there looks as though there could be a possible recovery here. Just finishing off with Tern, probably another old favorite here in terms of the charting. Interesting here that we've just hit the, as I said earlier in the week, hit the 200-day line and also this support line from May, around 14 pence. Ideally, that needs to hold for any meaningful recovery to get going again. Maybe if you're cautious, which maybe people would be now, wait for a break of that resistance line from June and the 50-day average at 21 pence, just to make sure that this is back on track in the proper bullish sense, but still holding that 200-day line, which is the boundary between bullish and bearishness there on Tern. That's it from me. More on Monday.